So there's no harm, there's no foul here. Everybody knows that's been on previous streams. I have tremendous respect for anybody that speaks multiple languages. To be
Yep,
able
yep.
to communicate with someone is, a blessing.
Mm-hmm.
And I really appreciate everybody that, has a chance to kind of just learn a new language and also be able to share that they're also trying to do that because, a lot of people think that they can also just only know one language, and it's also motivating for other people to kind of get out of their own skin and feel that they feel comfortable, speaking another language to communicate with the masses. So that's really, really awesome. So we really, really appreciate everybody that's here. I think we can just kind of do a small test recording on your end once you share your screen. If you want to just go ahead and click,
Yep.
share your screen, and then on OBS,
Let me do
let's see
that.
where we're at.
Here we go. Should be live.
So we get a one in the chat. Don't spam it because you'll be warned. Just like don't spam it. Just drop one chat and you can see it. That's good. That's good. All right, two,
Yeah.
three, four, five people. That's fine.
Cool,
Perfect. You
cool.
don't need a. All right. Awesome. Awesome. All
Tons of
right.
ones. Tons of ones.
Yeah. This is gonna be really insightful. I'm gonna be kind of just here if you want to bounce out questions and
Yep.
just
So
be a mind of reason, but I'm going to give you the stage and, allow you to speak whatever you want to speak. Just be, aware that this is obviously being recorded. So, we want to drop some sauce, but, your own personal stuff, let's, just be mindful of that as well. So, all right,
so
everybody, please just give him a lot of respect. He's taking some time out of his day today, and it's, a little bit, at nighttime by him. So it's, just
it's 8 p.m.
give him some love in the chat. He's taking some time out of his day, and we really, really appreciate it. So,
Absolutely.
without further ado, thank you.
Alrighty. So some of you guys may already know me. There's a lot of familiar faces in the chat here. I do have my own Discord, so a lot of and I did send a lot of guys this way anyway, and to Cold Brews Discord as well. So we share the love. You guys have been seeing a lot of Cold Brew lately, and he's been going into a lot of precision regarding order blocks and all of that. But what I found is that the common or recurring issue is that many don't know how to trade order blocks, what an order block is, how to trade it, what entry models you need to use. So I'm gonna talk slowly. I'm gonna take it slow, and I'm gonna try and go on a journey with you guys. And you, at the end, we're gonna sort of end up. Maybe I'll leave it for a surprise, right? I'll leave the ending for a surprise because we're gonna end up somewhere that is familiar to all of you, right? And
Love this.
right. So I started trading up quite a while ago. I actually did this in reverse. Started off with crypto, and then came on to forex and then indices. In my early days, I started off using wave theory, a lot of wave theory. So I have an extensive background in wave theory and neo wave theory. Whilst it gave me a good high time frame perspective or view, it lacked the precision that I needed to trade the markets intraday, right? I couldn't be like crypto and just try and find a high or a low and hold it, right? So I got on and I ended up with the currency merchant, right? In the early days, Cold Brew was there, a lot of guys were there, and that was an experience and a half, right? Early days, TCM or currency merchant was the place to be. Studied a bit of ICT, but if it was advanced concepts around ICT, then TCM was the place to be. So during my time there, we went down a lot of rabbit holes. And you sort of have to learn or unlearn a lot of ICT stuff if you want to do the things that we do. And we'll run through that journey now, right? And in the early days of ICT, TCM, what happens is he introduced a model to me and the rest of the guys called the Zoom model, right? Some of you may be familiar with it, others may not, but when I start talking about it, it's going to be familiar, right? Just the name, just remember the name, Zoom. And what the model basically entails is that we have some sort of accumulation that goes on, right? Some sort of accumulation. We then have what we call a failure swing. And at this point, it's probably going to be lying above some high time frame point of interest. We'll just use these orange lines at the bottom of the screen here. You guys can still see the screen, right?
Absolutely.
And, right. So what this actually does for us is create something which we deemed or called the real low in the market, right? A real low. And when that happens, we know from, what's up, Keenan? We know from the elements of a trade setup from ICT that reversals don't occur from consolidation, right? So what does that mean? It means that at some point we need, if we are bullish, we need this low run, right? Makes sense. Yes, no, maybe. These are the things.
I just want everybody to be interactive in the chat too. So if you wanna be able to get their interactions and such, just tell them to drop like a 1 or a 2, and I want everybody to be able to respond as well, because it's the whole purpose is everyone to be interactive and learning. So we really appreciate everyone to participate.
Yep. So we need something that occurs in the market after this. Let me label it out for you, right? This would be accumulation happening on the way down, right? And then we could have a single move up or a series of moves where we start to consolidate, and it ends up being a failure swing, right? A failure swing. And the next step that should follow, if you are bullish in this case, would be something that we call an OLR. You would have heard Cole Bruce say OLR. And basically what that means is it's an opposing liquidity run, right? You want to call it a turtle soup, you want to call it a Judas, a liquidity grab, whatever it is. For this purpose specifically, it's an opposing liquidity run, right? Stop hunt, yeah, stop hunt. You can call it a stop hunt, nothing wrong with that. But for the purposes of teaching this, because you're going to see me talk about OLR or mention OLR a lot, we're going to call it an OLR, not a stop hunt, not a Judas, not a turtle soup, not a liquidity grab. We're going to call it an OLR, right? So we have these phases where we have accumulation, we have a failure swing, we put in some low in the market, which we deem as the real low in the market, right? And we have an opposing liquidity run, which we deem to be a run of the real low, right? A run of the real low. Once this occurs, and if you had to put candles onto this, you would probably have something like this, and you would have a series of candles inside here, right? Mind the colors for now, something like that, and then we'd have the OLR. And when we get the OLR, we are always cognizant or chasing after the fact that when an OLR occurs, we need an order block to form inside liquidity. Preferably, we'd like to see that order block that forms inside this liquidity to be a body closure below the real low, right? So these now give us reference points where we had an accumulation, we had all these failure swings inside here, and then we had Shivji I'll speak about that at the end, right? So we have accumulation, a failure swing, and we have the OLR. Now, the definition of an order block is that it should form in liquidity. That should be super or abundantly clear to everyone that that is what an order block is. It should take liquidity, and then it should create displacement, ideally with an FEG, right? Very important fact. And my filters that I've had to create for order blocks forming in liquidity would generally need or require an FEG in the stop hunt leg. Big words. Stop hunt leg. Basically another term for an OLR, right? So the ideal OLR, or runner for low or high, would have to create, or you'd want to see it create an FEG, right? Now, we want these FEGs to be created in the stop hunt leg because FEGs that are created in the stop hunt leg allow us to determine where market structure shift has occurred. Ordinarily, you would have had a swing high right here, right? And I'm going to go into a few variations of aggression. Let's put it there. Whoops. A few variations of CSD, the classical CSD, the aggressive version, and we could call it the PoiSzn version, right? Now, once we have an FEG in the stop hunt leg, and we then have an order block that is formed inside liquidity, in this case beneath the real low, right? Just draw in another little candle inside here, so we have this FEG here. The first thing we want to determine, because I'm going to direct you into a sequence of stages or events, right? At the end of this, when we have an FEG in the stop hunt leg and we start to close above that FEG, well, that is when we have market structure shift. This is when the MSS occurs, right? Now, this may not be, or what I'm telling you is, or are definitions that I have learned and that I have used. They are not strictly ICT definitions. They may not conform to ICT definitions, but just bear with me, follow the process, and at the end of it, we'll all come out on the other side for the better, right? Now, we know that in order for me to be bullish, right? In order for me to be bullish after a stop hunt has occurred or an opposing liquidity run, we have the FEG, which is an indicator of MSS occurring, right? When we close above it. This is your first sign of aggression right here. Because when you close above an FEG, this now becomes market structure shift. You'd see guys like Dodgy preach IFEGs or inverse or inverted fair value gaps, and they trade that with a stop below the low, right? Now, for us to be bullish, where would you consider this price action to start getting bullish? Would it be when we trade above the down candle right here? Would it be this swing point right there? And we'll run through a few examples of both, right? Close above the range. Now, the time frame doesn't matter, focus, unless you're asking what the time is now, right? But the time frame doesn't matter. Forget the time frame. This could happen this is fractal. It happens in all time frames. So, if we were to be bullish, you would get the classical ICT definition, right? And which the T-Trade indicator uses, would be the opening price of the series of down candles in the stop hunt leg. That makes sense? The opening price of the series of down candles or the single down candle that formed in the OLR or the stop hunt leg, right? This is the classical CSD. All it requires is a wick, not even a body closure, a wick above here for a change in the state of delivery to occur, right? Right there, through the opening price. The TCM version would mean or require a wick above the order block that formed in liquidity, right? So classic ICT would be, or what T-Trade's indicator uses would be a wick through the opening price of the series of down candles. Your change in the state of delivery would occur when we wick through that opening price. The TCM version, and I'm going to show you variations of it, would require a wick through the order block that formed in liquidity. So it would be right there at the swing high that was created before the move down. Now, I've used both, and for me personally, and for confirmation purposes, I've had to create my own definition, right? And that definition requires me to have a body closure above the swing high, like so. This was the swing high right here in blue. I require body closures for my filters on the OB model, and I'm going to show you how we identify it and how we trade it. The classical OT trades version would be a wick through the opening price of the series of down candles. The TCM version would just be a wick above the swing high. That creates so 3 different definitions of CSD or CISD, whatever you want to call it, the change in the state of delivery. A very important concept. I'm not always looking for a breaker to be formed, not always, right? We'll get into it. We'll get into it. I don't personally trade breakers. And I'm Josh. I stand to be corrected. T-Trade's CSD would be a wick through the opening price, right?
It should be the close to the opening of the
Close through the opening. Close to the opening.
Yeah.
Right.
But yeah, again, we're all family here, like I said. So it's like we're just here also for your interpretation of what you're looking at for your own studies as well. So I just want everybody to understand. If you have specific questions about the tools or other things, then they can ask that in the chat, and I'll be happy to answer that.
Okay, cool. So from my back testing, and this all depends on the level of risk that you guys are willing to accept in any trade, right? There's always going to be a level of risk, either risk averse, whatever risk tolerance you may have will depend on the type of aggression that you use with this model. Now, when we have something like this, right, I'm just going to put a wick down here and a wick right here and a wick right here. When we have these 3 varying levels of aggression, or maybe 4, you would start to find numerous entry models forming, right? And what happens here is with this particular model, when we have the change in the state of delivery, I start to mark off the swing high to the swing low, the entire series of up or down candles that created the stop hunt leg or the OLR, the Judas, turtle soup, whatever you want to call it, right? This becomes my OB range. This model is called Zoom because what happens is after the accumulation, the failure swing, and the opposing liquidity run, we have a push above the swing high, the most recent swing high, right? take extra note of why I said that, because I'm going to show you a few examples now. And I don't particularly care whether this wick right here was formed by an up candle or a down candle, right? It's of no use to me. As long as we had a series of candles that created what most of you may call a breaker, right? Like so. From this low to that high. This would be the entire series of candles that I'm looking at here, right? To form that breaker. Now, when we have the OLR, the next step up is we're looking for a push. And this should be ingrained in you that when a swing high or a swing low is taken, there should be some measurement of retracement, right? There should be some measure of retracement. Where would you be shopping for your entries? Anyone can tell me where would be shopping for the entries before I give my what I do or what I want you guys to do? Fair value, right? What is fair value? Mean threshold, FEG plus real low. Good answer so far, right? 50% CE of that OB, 50% range. All excellent answers, right? And there are going to be numerous variations of all of this, right? For my purposes, I am always looking for 50% or the mean threshold of this OB range to be mitigated, right? That means in an ideal world, we're going to come here. How we come there is a different story. We could come straight there. We could generate internal liquidity like so, then come there, create a change in the state of delivery, and then push higher, whatever it is, right? But I'm telling you, in an ideal world, or in my world, I want 50% of this OB range mitigated. 50%. Because when they don't mitigate 50%, it leaves it open for them to come back another day or another time, right? And then you get theories around inducement, right? Inducement, some guys call it a swing breakout sequence, whatever it is. And that would form on an instant where we do this, right? And then we start pushing higher. What this creates is a level of inducement, right? Big words again, inducement. And basically, what does it mean to induce? What does inducement mean, or to induce? What happens here is I'm trying to shop 50% right here. But I see these fuckers moving above this high, I start to FOMO in. So they have induced me or caused me to now forget shopping 50% here and start FOMOing on some breakout of this high to push higher. Now, how many times have you guys seen what happens next? Because what happens next is a very common occurrence. Out the blue, you get something like that. You're swearing yourself, yep, wrecked, right? You're kicking yourself, swearing yourself, all sorts of bad things because they induced you, right? And this is why I'm always looking for 50% of an OB range to be mitigated. If they don't mitigate 50%, they could fuck off and make new highs or whatever. They could do something like that. That's fine. I know that at some point this is going to occur right here because there are orders that are sitting inside here. So this is where I would ideally like my entries to form at 50%, right? Now forget the inducement part. Let's live in the ideal world. The entry forms at 50%. Well, where would that entry likely form? It's going to form at 50%. But for me personally, I've created some filters around this, right? So this is called the OB model, where we have accumulation, a failure swing, order blocks that form in liquidity. We then have a change in the state of delivery. We've now been able to identify the order block range that we'd like to shop. We know where 50% is. For me, the filters that I've had to create to trade this, and I'm just going to touch on the CSD one more time. T trades would require close above the opening price. ICT would be a wick above the opening price. TCM would be a wick above the order block that formed in liquidity. My versions for this filter on this model require close above that OB range, right? 50%. That's it, future, 50%. Right. The models that I've had to, or the filters that I've had to create, number one, let's call number one. Are there any imbalances inside the range? If that answer is yes, trade the imbalance. Trade the imbalance, right? If the answer is no, the lowest hanging fruits or the lowest entry or the earliest entry you're going to get is trade the opening price. But I'm greedy, right? I'm greedy, especially around this model. I don't want to trade the opening price. If I'm trading the opening price, it would mean that there are no imbalances present in this range. There's no imbalances present in this range, like so. We'll just make this a different color. Let's do that, right? Or they've gone inside this range and already done a lot of work around that 50%, like so, right? Before they've given you the CEISD or the CSD. In cases like that, I wouldn't ideally look at 50%. I'd look at trading the opening price, which be right here, because they've already done the work inside this range to create the efficiency. I trade the opening price, Bob's your uncle, let it be, right? But when that doesn't exist, we're always looking to mitigate 50%. So these are the only filters that I have for this. We've identified the OLR or the stop hunt leg. We know where the MSS occurred because of this FEG that now become an IFEG. They've created another imbalance inside the range. They've created the change in the state of delivery. We know for this model, which is the Zoom model, right? Zoom. That there should be a measurement of retracement, and ideally I want to shop that retracement, however they may do it, at 50%. If they do it this way, you are fractally going to see another Zoom model occur like so. When I say fractally, it would be something like this. That's the Zoom model. Is this quote unquote pattern familiar to you? I've just given it a name, right? Zoom. Yeah. All currency merchant teachings, right? This is not mine. This is not mine, but it is public information, so I can discuss it with you guys. So, we try to shop 50%. We have accumulation, failure swing, an opposing liquidity run, ideally with an FEG in the stop hunt leg. We have a push up. We have retracement. What follows next? Expansion. Now, what I've just shown you is what should occur in the market at all times. It is called the order of delivery. Number one, for the order of delivery to occur, we should have liquidity being taken, right? Or what we call the OLR. Number two, there should be MSS. Number three, there should be a change in the state of delivery. Number four, we should have a measure of retracement. And number five, what we all love and love to capture, expansion. This is the order of delivery. Ideally, this is how all of your setups should form. They create or generate liquidity above a high time frame point of interest. They run that liquidity, they create a change in the state of delivery while creating an MSS. We have the retracement, ideally to 50%, and then we have expansion. Your entries are then going to form, or your long positions at 50% or inside the imbalance, stops below the low. What do you target? You're going to be targeting any liquidity pools to the left. For this, I'd like to use stat map for MND levels. Your entries are also going to form using a zoom around the MOD levels on the open, high, low, close, or stat map, right? And if you don't know what to do, we take the low to wick high. I don't take any body low to wick low to wick high. We use the standard deviation fibs, and we head on 2 standard deviations. Pair that up with an MOD level, pair that up with liquidity, and this is your entire model, right? This is zoom. This is zoom. This is the order of delivery. Does that make sense? Clear? Something familiar to you guys? Right. Thanks, Kale. Now, it is not it is not random, and I'm gonna head into this just now, that the opposing liquidity run or the run of the real low. Let's get rid of this. The opposing liquidity run or the run of the real low, right here. When price starts to get back above that range, that the market should find support ideally at the real low, because as it says, that was the real low in the market before we had the stop hunt occur. So if you're pairing this up for confluence, that's where your entry is ideally likely to form. Accumulation, failure swing, opposing liquidity run, back up, closing inside the range above the real low, use the real low as support, time to moon. Now, how often, firstly, is this all clear, right? Can I move on? Are we clear in the understanding of what the order of delivery should be? How it occurs, where your ideal entry should form, and why we would like to see an FEG in the stop hunt leg in order to determine a market structure shift. That's one ideal model. What do you do when you don't have an FEG in the stop hunt leg? How do you determine a market structure shift occurring? for me, it would be when we have the real low in the market and there are 0 FEGs in the stop hunt leg. For me, personally, let's do that. The MSS would occur when we close back inside the range. Once we close back inside this range, if there are no FEGs present in this stop hunt leg and we can't determine market structure shift because of that, we just need a candle body closure back inside the range. Just want to confirm that your definition of MSS is a severe busy created on the left side of the chart. Left side of the chart, right? Everything we do is never going to be to the right. We don't know what's going to happen on the right. Everything we reference is going to be to the left. That's where all the good stuff's happening. It's happening to the left, right? So, ideal world, we have an FEG in the stop hunt leg. All is good. We close above it. Market structure shift occurs, and we wait, right? When we don't have this FEG in the stop hunt leg, well, we're going to use the real low in the market. Real low. And the moment we get candle body closures back above and inside the range, that is when MSS should occur. We should then look for support ideas or logic around the real low, send price higher. Same things apply. We could have a situation right here. Change in the state of delivery occurs. All the same things again, different order, CSD. So we had accumulation, failure swing, opposing liquidity run without an FEG in the stop hunt leg. We had MSS occur when we closed back above or inside the range. We then had a change in the state of delivery when we closed above here, the most recent swing point. We had the measurement of retracement because we are now able to identify the OB range. And then we have expansion. That is the order of delivery. That is MSS with and without an FEG. Make sense? Now, the real low, a real low would form around or above an MOD level or liquidity pool, right? It's how they engineer or create that liquidity. We create a real low, we run the real low. CSD, MSS, CSD, retracement, expansion. Now, how many times have you seen this, right? Situations where price just starts running. And we had a CSD. There was no retracement back to 50% of the order block. It leaves you behind, right? You expect some sort of retracement to occur, ideally, or ideal world scenarios. You want some measurement of retracement back to 50%, but price starts to F off. Is that something you guys have seen or familiar with? We have all of the ingredients. We have the accumulation. We have a failure swing. We have the stop hunt leg or the OLR. We have the push up. We create a tiny little down candle range right here, and then we just fuck off. And there was often times where I was left stranded. Yep, island reversal. There was often times where I myself was left stranded because I used to think of this as a pattern, but it's not a pattern. Zoom is not a pattern. Zoom is an understanding. And what used to happen was we used to create either something like this, an F off, and it would leave me completely gobsmacked, not knowing what to do. So I started to dig in to look for other criteria or other ways of determining MSS or ranges that I would trade. And this is where Flash was born, right? Some of you may be familiar with it, some of you may not be. And the idea was born, and then the name was basically because this previous model right here was already called Zoom, and I'm a bit of a DC geek. I named this guy Flash, right? And we're going to talk about what Flash is right now. Flash occurs when we classically look at market structure shift occurring, where, let's get rid of this. In the absence of any FEGs in the stop hunt leg, where we are unable to determine market structure shift, ICT definition would be we create a higher low in this case, right? And then we create a higher high. The flash range is basically marking off this order block range that led to a new high being created. It is very important when we identify this, especially if around your Zoom model you're going to see something like this occurring. Well then, if we start to close above the flash range right here or right here, we're going to look to trade this flash range that's inside here. And this flash range could be confluence with the 50%. It could be a flash range that occurred inside here. We then made a move higher. We did something like this. We made a new high or a higher high. Now you are left stranded because you're looking for this. In your head or in your mind, you want this to occur. I want them to come to 50%. Unfortunately, the market doesn't move on neither yours or my whims or fancies, right? The market will do what it needs to do. When you start to forget the ideas that the market should retrace or should go to a level, right? It doesn't need to do anything you do. What you need to do is understand that when we create a new flash range or series of down candles right here, your job, and you only have one job, is to trade that range right there. The filters around this, they can wick that range, no problem. They should never close below the flash range, because once you start closing below ranges, what happens? CSD. And that's not good if you expect higher pricing. So they can wick these flash range lows. That's okay with me. I have no issue with that, right? More often than not, we go default to the OB model logic, and the OB model logic is the same whether we use flash or we use Zoom, which would mean, are there any imbalances inside the range? If yes, trade the imbalance. If the answer is no, we would trade the opening price or 50%. Loop 1, ideally, this comes to the logic that your position, if you're trading 50%, should be a few ticks below the low, because this low should be a protected low, right? A protected low if order flow is bullish in this case. They should not be closing below down candle range lows until the objective is met. If you get stopped out in here but it's with the wick, look to re-enter, take price higher, right? So unless the objective is met, we should not be closing below the lows of down candle ranges. We should be looking to trade 50% and continue with order flow. In this case, bullish order flow, right? Now, I took a lot of flack around this because guys like DTFX who blocked me, said a lot of bad words in my DMs when I tried to talk to him. He's like, well, you just stole my idea. I teach this stuff for free. I've been trading for a whole 1.5 years. Right? All sorts of nonsense. But this came out of not even a desire, but a need to be able to identify market structure shift if I don't get what I see or want around the Zoom model. This is where the Flash model was born. It is basically, Zoom would be breaker block ideas. No problem, TooDegrees. Take it easy, brother.
Much love, brother. I appreciate your time. Truthfully,
Appreciate you.
we'll talk
Appreciate
soon.
you.
Yeah.
Yeah, soon.
I'm gonna still be here, just be on mobile, but we
No
appreciate
problem.
you a lot.
No problem.
And
Thanks, Josh.
I just hope that the recording's still there, so everything's still good. Everyone still knows that we're still going on. We just have real life that we're still, going
100%.
through airports and still going through stuff. So
100%.
appreciate it a lot.
100%. Right. So, thanks, Matt, man. And you're one of those familiar guys that I've seen in my own Discord, right? So, Flash was born out of a need of not being able to catch a move fast enough because I couldn't identify where MSS occurred. And when these down candle ranges formed and we closed above them, I had to sort of reprogram myself into not thinking inducement. They must come down to 50% of that OB range and then go higher. No. Forget that. They don't have to fucking do anything. The previous OB range, after we've closed above it, is your max expectation before continuation occurs. At this point, right here, this is the previous OB range. At this point right here, this is the previous OB range. Am I going to worry about this range when we've closed above this range? No, I'm not. Until or unless an objective has been met. Right? So the max expectation for any retracements should be the previous OB range above or below current price. I should not have any greater expectations for any short setups that occur inside here, fractally, Zoom, or Flash, to take me any lower than either the opening price or 50% of this range. If they do, well, that's a bonus, because that means if they start to close below here, we're headed down here. Right? Because this will give you a change in the state of delivery, closing below the previous order block down candle range with bodies. CSD. That's not what we want to see if we are still bullish. If we're bullish, the max expectation would be the previous OB range, and then we continue higher. Another thing to keep in mind, I feel to validify the low of the OB range is inducement or not, if it's the high of the structure to the left before closing above. Okay. Now often you're going to find instances where they create this little flash range inside here, they close above, you'd come back, you'd look to trade the flash range, because now, besides narrative, we're going to look at precision. Why? This was the OB range inside this OB that led to the higher high being created, right? You're going to look to ideally trade all flash ranges for continuation. Flash ranges have mitigation block logic or ideas, and flash ranges are ideally suited for continuation plays. Make sense? Zoom versus flash, a little bit of DC geekiness. Cool. Yeah, we could do that. We could do that. So now that we have Zoom and Flash, and you guys are all familiar with the logic behind that, if we had to use aggressive CSD versus classical CSD or PoiSzn CSD, what would that ideally look like? What would that ideally look like? And I'm going to introduce one more concept inside here of why the real low works the way it should, right? When we have price action here, we could say that this probably came to some MOD level, probably taken liquidity to the left of some sort here, or come into a previous flash range that existed to the left of current price action, right? What do we see down here? We see a low being put in right here. We see them run this low right here. We see an FEG. So all the good things so far, right? We see an FEG. Where would we look on this time frame particularly for the change in the state of delivery? For me, I'd be looking right there, right? That is my personal confirmed change in the state of delivery when we close above the most recent up candle range. Now, what is the most recent up candle range? It's this guy to this guy, drawn out in time right there. I'm going to zoom in. And I would mark this up candle range out here, or these up candle ranges here, because they would serve me as a purpose of being an OB to contain price and send price lower. If the objective was not met, this would be where price should be held, right? So we have a real low. Let's mark it off. Real low. We have an FEG that we close above right here. Do we have any CSD on my own definition yet, or the T trades? Not at this point. Not at this point at all, right? We see a little down candle range inside here. We could mark this range off right here, and we could look for any imbalances that exist inside here. We could trade this range. On a higher time frame, we could say it's this high to this low, and we'd look to trade opening price or the imbalances that exist inside the range. And if you're talking about imbalances, it would be this low to that high, drawn out in time. But I reserve all imbalances inside the OB range from the high to the actual start of the imbalance, right? I'm not interested in any portion of the imbalance that exists outside this flash range or outside the OB model. In this case, it would be the high right here to the low right here. There's the imbalance. You trade the imbalance. If there's imbalance inside the range, trade the imbalance. Now, what are you dealing with here on numerous levels? You're dealing with overlapping confluences where you have market structure shift right here when we closed above this FEG right there. You have classical MSS or confirmation of your flash range when we trade above this high right there. You have CSD and your OB model being confirmed when you trade above this range right there. You're going to look to shop, ideally 50%. But what are the overlapping confluences that we have around here? We have the real low in the market. We've closed below it. We've created the CSD. We had retracement back to where? It's not random. Let's get rid of flash. Let's get rid of everything else. We've traded back and found support at the real low that existed right there. Is that starting to make sense? Is it one step closer to understanding? Head and shoulders pattern. Head and shoulders pattern. Now I want to get a bit more aggressive, right? I want to get a bit more aggressive. I want to take the cold brew entries or the cold brew-esque type entries. Well, let's go back to aggressive logic. What does aggressive logic say or dictate? The aggressive logic dictates that if this was the real low in the market and we have this single order block candidate right here, remember it's not an order block until we've traded through its high. There's its high right there. We have an order block that has formed inside liquidity. We've closed below the real low to the left. We've now traded above the opening of this down candle. This is where we can start to get aggressive. Because if I were to start getting aggressive on this particular time frame right here, I would not need to wait for this entire series of down candles right there from this high to this low to get closed above to trade it back down there. I could trade this single OB right there, and the moment a change in the state of delivery occurs where we confirm the order block by trading above its high right there, I can shop 50% of this single order block candidate right there. This is what an aggressive order block entry looks like. Does that make sense? If you were to get even more aggressive, you would see cold brew start to front run this kind of entry, and it comes from TCM, where we would look for candle bodies to start closing above 50% of this order block candidate right there. And if I entered at 50% anyway, like so, with my stop below either the order block low or the range low, I risk what? Two things can happen. This is just going to fly, fuck off, and I'm good, right? I'm good. Or we're gonna get the confirmation of the change in the state of delivery by trading above this single candle's high, and my entry is gonna form around 50% anyway. My entry is going to form around 50% anyway. So if I were to use levels of aggression, either body closures above 50% of this range to enter this, looking for this, or confirmation of the order block here and trade 50%, both are the same thing. Now when you look internally and fractally, you can start to do what? Use the concepts the same way, because zoom is fractal. If I were trading zoom like so, right? Fractally or internal liquidity generation, I could say from this high, we had accumulation, we had a failure swing right here, we had an OLR internally, we had a push up, we had retracement, we had expansion. Do you see how that now becomes fractal logic? Internally. And if that is the case, and if this was a low internally, and this single candle right here was the candle that formed inside that liquidity, fractally it's the same thing, and I could make this an order block candidate fractally. This becomes the change in the state of delivery when we trade above the high of that single candle. You'd be buying any retracements into this order block because it is now confirmed and your stop below there. If I wanted to refine it further, you know that if you look past the candles, that this also on a lower time frame would be fractally a zoom inside here. If you went down to a 1 minute, I'm sure you would see fractally something like this, right? Which means you're trading this anyway. There is another model which I call Godspeed, and it's based loosely on rejection block ideas, where your greatest entries and speed would come from marking the lowest candle body in the range of the rejection block and looking for your entry to form right here. When you tap that Godspeed or rejection block level right there, they will not retrace deep into any order block candidates around here. They will use a breaker to send price higher, right? So now we understand what flash is. Flash is mitigation block ideas, right? A high, higher low, leading to a higher high. Our job is to trade the previous OB range or the flash range to send price higher. We are also familiar with the OB model itself, the last swing high, which led to the opposing liquidity run, the change in the state of delivery that occurs here, the retracement that occurs here, and the expansion that occurs there. These should be familiar things to you now in terms of Zoom or the OB model. Yes, no? Maybe? Still doesn't make sense? Cool, cool, cool. I want to introduce one more part of this, because what the ending is going to become is something that is now recently very familiar to all of you, right? Because if we look at everything fractally, then the ending will make sense. So we are now familiar with the concept of Zoom, where we have accumulation, some sort of failure swing, an opposing liquidity run, a change in the state of delivery, retracement, and expansion. This is the ideal Zoom model, looks like that. If we were talking about flash, flash would be a low that creates either a higher high or a lower high, we have a higher low, which leads to a higher high. This becomes the flash range, or the range that you would use for continuation all through until the objective is met, right? Once you start closing above ranges, we're not interested in any previous ranges. We are only interested in what we can control and see, right? Look what happens when we start closing below the lows of down candle ranges. In particular, the previous down candle range to the left of current price. Remember, this should have held, this should have led to a higher high. When we start closing below the lows of down candle ranges to the left, what happens? Shifting structure, market structure shifts. We shouldn't be closing below the lows of down candle ranges to the left. We then have a whole lot of, it's like an opposing zoom model forms, right? And we have things forming that start to look like, when you notice things like this, right? We have highs being taken to the left, coming into some high time frame or stat map level right here. We look for an opposing liquidity run. We see any FEGs that are forming inside a potential stop hunt leg. We want to see price close through them. If we get higher pricing, well, is this low to this high not your OB range or your zoom model range? Because if I had to do this, accumulation, failure swing, opposing liquidity run, push, look at the internal or inducement being created right here, a push away, retracement, expansion. Is this not the order of delivery? OLR, number one, OLR. Number two, MSS, which means we either need an FEG in the stop hunt leg to show us that MSS, or we need to close back inside the range after taking a high to the left. MSS, CSD, retracement, expansion. When you start to look at these, especially around liquidity pools or stat map MOD levels, it's like you're not going to be able to miss. Because when you pair all of these fractally and you start to see or look beyond the candles, if this was the range or OB range that I was shopping on this time frame, I'd be looking at 50%, right? I'd be looking at 50%. Forget what the stop looks like right here. In this case, it's 6.75. What is your target? If you're bearish, you could use a standard deviation fib like so, right? And target something like this. Let's just draw this out. Whoops. What's going on there? You guys still there? You still see the screen? All good? Thank you, thank you. So when you start to see how the OB model works, how the zoom model and how the flash model works, and if you're shopping 50%, remember, we want 50% of the OB range to be mitigated when they do shit like this and they move away. This creates liquidity resting above here because the silly guys start to FOMO in, or the breakout traders start to FOMO in inside here thinking that lower pricing is going to occur. Their stops are now being placed above there. What do we come and do? We come and hunt their stops. So if you know that your ideal entry is going to form at 50%, well, that's where you're going to put your entry. You're going to look for 2 to 2.5 and body closures below there, 3.5 to 4. Pay it with an MOD level or liquidity to the left. There you go. 8.6R if anybody cares for that. The correct high time frame point of interest is more, if you're familiar with the open, high, low, close of the stat map, well then you're going to use those levels, right? And you're going to pair them with liquidity that exists to the left. Ideally, you want a high to the left of price to be taken. It doesn't have to be the high. It can be a high or a failure swing to the left. Make sense? Now, what happens inside here when we get to this point here? We could take this for face value, enter at 50%, stop above this high, and let it be. Or we could shop internally and look at which candles or highs are being taken to the left, right here. We could treat this as an order block candidate. It has taken liquidity right there. All I need, extend it out in time. All I need is a change in the state of delivery right here, and I can shop or sell any retracements back inside it to opening price or 50%, or be aggressive. In this case, I will be aggressive and I'll sell the closing or the CSD right there with my stop above here, and I'll target the same. Because we've met the objective, we've taken liquidity to the left, and then we've created a change in the state of delivery, shop it and sell it. When do you get out of a trade? You get the fuck out of a trade when you have an FEG being closed through. That is market structure shift. If you are looking at anything and you see an FEG in any leg and you start to close, don't fight it. Don't fight it. Please don't fight it. Once they close, this shit is coming. Now, if you think about all of this and what I've told you again, fractally, is this not on a higher time frame? Let's get rid of that, this, that, this, that. Have we not done something like, let's call this an accumulation, a failure swing, an OLR? We've created the CSD right here because we've closed or traded through this range right here. What are you looking for next? If this entire range is the OB range, fractally, aren't you going to say, if this was a smaller time frame or any sort of time frame, that your entry should form at 50% with the stops above the high, and we are looking to trade to 2 standard deviations, something like this, right there? What do you guys think about that? Fractally. I've shown you inside here how we could play it, and now I'm showing you as a fractal how you could play it. Because remember, fractally, what is this? We have an OB model right here, but what are we interested in? We are interested in this little range right there, which becomes The flash range, yes. So now what do? We enter at 50% of the flash range with the stop above the high. Because flash is where your entry should occur. Are there any imbalances inside this range that you can see? Trade them. You want to refine your entries even more? Look at refining the flash even more. Well, now I can enter here and I can put my stop above there. Again, 6.5 points. Are the alarm bells starting to ring? Is looking past all of the candles starting to make sense? I've only shown you, in this case, what we did on the current price action, but when you look past all of the candles, what am I showing you? I'm showing you that all of this shit is fucking fractal, and this is the order of delivery: accumulation, failure swing, so accumulation, failure swing, OLR, MSS occurs inside here when we trade through here, CSD, retracement, expansion. Again, is this not the order of delivery? 5 steps.
If you guys aren't taking notes right now, I don't know what to say right now. This is just straight sauce. Can we get a mic check 1 2?
I can hear you. Can hear you loud and clear.
Is this all good? Is anybody paying attention? Is anybody paying attention right now to this? I feel like we need to get the chat going to make sure that everyone's paying attention. Okay. I just want to make sure, because you guys aren't seeing what value is being shared right now. You need to really, really evaluate how much you're listening right now, because this is some serious sauce, and we really appreciate PoiSzn being here. This is huge. Thank you so much. Honestly, this is huge right now. I'm taking notes in my head right now while I'm on the way back from the airport. Like, you guys need to realize, like, everybody's in it to win it. Like,
that's the idea.
Let's go.
So we can't just concentrate any of our thoughts or ideas on little M1 candles or what we see printing inside here, because everything is fractal. On this particular time frame, I saw this accumulation, this failure swing, this OLR, this CSD, this retracement, this expansion. But all of that on one time frame higher was just a push or the CSD, and then your retracement came in, then your expansion. Now you're not left wondering, why the fuck did this happen? Because it was meant to fucking happen. It is the order of delivery. Number 1 is the OLR. Number 2 is the MSS. Number 3 is the CSD. Number 4 is the retracement. And number 5 is the expansion. If you are not thinking about fucking order blocks and how simple these things are, then I don't know how the fuck you are trading. Because the whole foundation of your trading, my trading personally, is based around the understanding of order blocks and how I can trade them. You don't trade them blindly. We're always looking for a change in the state of delivery. And when we get that change in the state of delivery, depending on how aggressive we are, that's when the magic happens. So we've gone through Flash, we've gone through Zoom, we understand market structure shifts based around FEGs in a stop hunt leg. These all become support and resistance ideas, right? ICT said any of his PD arrays can be inverted. All of his PD arrays can be inverted, right? But I'm not here to give you any fancy bits of information. I'm here to get you guys to understand the basis, because this, my friends, is the foundation of all of your trading. Yes, no, talking through my ass. Makes sense? Now, let's get to the good bits. Let's get to the good bits. Let's look at today at the highs, right? We had New York open. We had these Asian highs to the left. And what would I be shopping here on an M5 or an M1? At 9:30, right here, we open up, we print an up candle body that takes liquidity to the left, right? An up candle body that takes liquidity to the left. In that case, if I was a bullish man, I would look to shop this. Agree? Disagree? Because the good book says that we created a down candle range, we've closed above it, I need to shop the good book, right? I need to shop retracement there and find expansion there. But my friends, why the fuck have we traded below the low of the up candle that has taken liquidity to the left? This is a fucking alarm bell and a half. I instantly went short. I'm not even talking about getting more aggressive and looking at closure below 50% of this range right here. I instantly went short when this 932 candle traded below the low of the 931 candle. Because if I was bullish, they should not CSD this fucking candle's low if they were going to send price higher. Now, I'm not using any fancy opening range stuff like cold brew. I'm just keeping it simple here. Logic is, if this was bullish, shop 50%, send price higher. Why the hell have they traded or created a change in the state of delivery below this candle, 931 candle, that traded above here to the left? Yeah, this was what Cold Brew was mentioning yesterday, and I did tell him I'm going to talk about this because there are varying degrees of aggression that can occur, right? Varying degrees of aggression. And that varying degree of aggression would be the super aggressive that you've seen now. The other degree of aggression is that this low to this high creates the range. So we have all the good bits again. We have an accumulation, the failure swing, the OLR, the CSD. But what happened here? Most guys that I know get left. They get left behind because they're looking for that. On days like this, you see a CSD right there, you fucking spam that fucking sell button. Spam the fuck out of that sell button, right? What probably would have happened later on is this. They come back. We could extend that out in time. Right there. You have one job. One fucking job. That is all that you have. Slap it. Now, I want you to start thinking about efficiency and inefficiencies, right? I want you to start thinking about that. I want you to start thinking that no price action exists before, let's call it here, right? None of this exists. You know nothing to the left. Nothing. Zilch. Nada. Right? Nothing exists. What happened here? We had body lows right here. Price trades up, trades back down. Whoops, body candle lows right here. Price trades up, price trades down. Efficient. All efficient above here. Everything below this purple line, inefficient. So when you are thinking about looking at any targets, well, you're going to be looking for candle bodies to print right here, which makes this run that went up right there one-sided and inefficient. We make it efficient. We run below it, creating one-sided delivery that is inefficient. We come back and we make it efficient again, right there. This should always be at the back of your mind. Forget what is to the left. Treat this as the only price action at extremes, like you see here, at extremes, that this is the only price action that exists. If this is the only price action that exists, then everything below this line is one-sided and efficient. They should come back and make that fucking thing efficient. Go back and look at any piece of price action. You think this push up to this fucking level right here was random? If I did something like this, you think this was random? Yes, no? Not random. Not fucking random at all. Yeah, Sniper, it's form fitting. 101. Form fitting 101. A whole ton of bunch of randomness. Random fucking occurrences that they should trade to certain... how do you know what's erasable? How do you know what's erasable? That's a good question. You don't, right? I don't look at New York or an RTH. I'm talking about an extreme. I could have taken the extreme from here, the highest highs, right? I could have taken it from here. I'm only looking at extremes. From this low or this low, right? If I took this low right here and I did that, and I did that, what's the inefficient bit? Would you say right there? Trade down, we trade up, all the way up here, no candle bodies, boom. It's magic. Now, the last piece of the puzzle before we get to what the surprise ending should be. And I'm not going to teach it in terms or talk about it in terms of what do you call it? The actual definitions that these zones are created in, right? I'm not going to talk about it like that. I'm going to talk about it in terms of just a box, just a simple old rectangular box, and I'm going to show you how to incorporate it and where it all fits in, right? Let's look at this piece of price action right here. Let's take, again, a real low that is created in the market, right there. And we have an OLR below it, right? Right there. Have you ever heard the term that old highs and old lows are fair value? Have you guys ever heard that? That old highs and old lows are fair value. It's probably one of the only times that I would buy in discount, right? Shopping an old high or shopping an old low. Breaker block ideas. Now, old lows are fair value for selling, and old highs are fair value for buying. Crazy, right? Let's take it one step further. Let's take it one step further. If an old low was fair value for selling, what happens when we get back above that low? What happens? Any takers? And we are saying that this is the real low in the market, right? That's your OLR. This real low is fair value for selling, right? If there were any FEGs that occurred inside here and we flip that, that's market structure shift. But when we flip an old low, it flips from fair value for selling to fair value for buying. So how can I objectively create a little zone without getting too much of an information overload as to why I chose that zone? And the answer is pretty simple, right? I've spoken to you about the real low in the market, running the real low, closing back above the range, creating a change in the state of delivery. I've told you about looking for the real low to act as support for your ideas or logic that higher pricing should occur, right? These are all simple things that I hope all of you understand to the basic level, right? Or at a basic level. Yes, no, maybe? Because remember, overlapping inside all of this, what's going on inside here? Well, you're thinking, this is the OB model range. This is the flash range right there. Are there any imbalances inside this flash range? From here to here, right there. Am I interested in any part of that imbalance that exists outside of that range? No, I'm not. So that is not random either, right? Now, let's introduce the fun bits. If I were to add one more overlapping factor for you guys, can you guys still see the... Are you there? Seems to have bombed out. Lost the stream. Let me try again.
They don't want us to know what just happened. I don't know what just happened.
No idea.
And there's two PoiSzns in the audience right now.
Crazy.
Hold on a second. in Discord, so I'm not really sure what just happened there, but let's just try to get him back on stage. Hopefully you got the this is crazy.
They got to us, fam.
Doing one too?
They got to us.
They got to us. They just killed the stream. Alright, so can we confirm that wasn't me and that wasn't you?
No, it was neither. It just fucked up.
Can we confirm that wasn't me, that wasn't you?
Well, it wasn't me. It just bombed out.
Okay.
It bombed
Just
out
want
at
to
the
make sure.
It bombed out at the sauciest, but
Yeah, it did.
all right. All of you should be able to see my
Alright.
screen.
Let's see if the recording still should be okay or not.
Yeah, I think my recording should still be okay as well. Yes, it is. Right. Let's introduce one more overlapping factor that I discuss in my own Discord, right? And we're going to get to the surprise ending, right? And now that I've taken you through the journey of what the OB model is, what the zoom model entails, what the flash model entails, where we'd be shopping for any of this, where changes in the state of delivery occur, classically, T-Trades wise, my version, ICT version, and the very aggressive version, right? What more overlapping can I give you? Well, if we know that all lows are fair value for selling and all highs are fair value for buying, can I just get some ones if you guys can still hear me before I continue again? Ones? Okay, cool. That's all I need. That's all I need. Thank you. Right, 1.2, perfect. I would need to be able to identify when we close above a high or below a low, right? Now, previously what I would do is I would take from the lowest low to the first candle body closure below it, and I would call this my order pairing zone, right? Because candle bodies are now closing below a low. If they were to pair any orders, it would occur right here and send price lower. But what happens when they get back above the order pairing zone? Again, we switch from fair value for selling to fair value for buying. But when you are a TCM guy and you talk about something called an engineered origin, right? But I'm not going to get into that. What I am going to do is tell you that the zone must be drawn after we've identified the candle that closed below it. If you are bearish, take the high of the very next candle. So it's the high of the very next candle after the candle closure, right there. What this does for you now, my friends, when you close above the order pairing zone, you fucking spam the fucking buy button. Interesting? Not interesting? Not interesting enough?
Some fucking sauce, bro. What do you mean?
Right.
Some fucking sauce.
Because if this was fair value for fucking selling and they've now flipped it, the logic dictates, or the good book says that this should be fair value for buying. All you need to do is create a change in the state of delivery to confirm intent, and you spam the fucking buy button in what I've now given you as the order pairing zone. So the entire journey, the entire fucking journey that I've taken you from the beginning, taking the time to explain what the zoom model is, what the OB range is, what flash is, what MSS is, where the different versions of CSD occur, well, I could go and form fit any of this logic, right? Let's form fit this logic. Here's a low. Here's the candle that closed below it. Here's the high of the next candle. Boom. We could look to sell any retracements here, right? Right there. Let's go again. Here's a low. Here's a candle that closed below it. Here's the high of the next candle. Boom. They're pairing orders. They're pairing orders. They're fucking pairing orders. Crazy, right? And this is on an M1. You could do this on an M5. You could do this on anything. Here's a high. Here's the candle that closed above it. Here's the low of the next candle. Boom. Magic, magic. Let's go here. Any candle closures here? None, right? Change in the state of delivery occurs there. I'm not really interested in this on the M1. Go on, go on, go on. Here's a high. Let's go. Here's a high here. Here's the candle that closed above it. There's the low of the next candle. Magic. Magic, magic. Here's a high. Here's the candle that closed above it. Here's the zone. Right there. And so on and so forth. Are you starting to see magical things? That if you have a real low in the market and we close below it, when you are able to identify the zone and we close above it, you spam the fucking buy button. Change in the state of delivery. Buy. 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 Don't take my word for it. Go and test this out for yourself. Please, go and test this out for yourself. You could take any zone and it would flip, and we could do something like this. Close back below it, you sell. Yeah, I'm not even going into indicators here until just now, right? Haps. We're not even going into indicators just now. So when you look at these kind of things, and I'm looking at why does price stop where it does? There must be something, right? There must be something. Some reason for price to randomly fucking stop somewhere. If I took this high, this candle that closed above it, let's zoom in there. This high, this candle that closed above it, next candle's low, and I drew it out in fucking time. Magic, magic. Fair value for buying becomes fair value for selling. Fair value for selling becomes fair value for buying. Now, when you look at Zoom and you look at all of the good things, right? All of the good stuff. If I were to tell you that this was the real low in the market right here, for example, that this is the order pairing zone right here. If I were to tell you that if this was Zoom, accumulation, failure swing, opposing liquidity run, push, retracement, expansion. Magical things, right? Magical things. But you guys, and this is the surprise ending bit, right? You guys have now been given this as candle 1, candle 2, candle 3. Anyone know what I'm talking about? CSD, and what do we have is boom bang. There we go. You guys have the T-Trades fucking indicator. So what I've done for you is I've taken you on the journey that I told Cold Brew I would. From the very beginning to the surprise ending, which is what you guys have come to know this as the T-Trades indicator. Now this is something that I had wanted to do like 2 years ago, right? No one could do it because no one could understand how to identify order blocks, how to identify FEGs and MSS and all of that good stuff. And I'm glad that the guys at TooDegrees were able to, right? Because it saves a lot of time. It does. I don't have to actively go in here, right? I don't have to actively go in here and look for all of the CSDs. So when I do get a chance, I think what we'll get the boys at TooDegrees to do is code order pairing zones and the flash. I think that's what this needs to be overlapped with, because it's pointless me going and creating a zoom or PoiSzn zoom indicator, right? It already fucking exists in its simple form, right? What we do need is we need an indicator to overlap with the T-Trades indicator that would draw the OB out for us and identify any flash ranges inside, or identify opportunities in terms of imbalances inside the range, or order pairing zones, right? That's what we need. So the T-Trades indicator is good for showing you where the CSD has occurred. I don't know what the T-spot is, right? I know that it's good for continuations. That's fine. They could, in my head, in my mind, they could be further refinements, but I don't want to step on any toes. I'm saying we make something that overlaps. We make something that overlaps with T-Trade, that encapsulate or incorporates the other bits of information we need to take those entries. Right?
PoiSzn, you're doing a phenomenal job delivering your message right now over here. I know that we've been cooking behind the scenes as well, and you know, giving the family the teasers and such. But you know, we definitely appreciate it. We're gonna get TooDegrees and PoiSzn a really nice opportunity to work together. This whole entire collaboration is everything of who we are and what we stand for. And I think that the whole community can really see that. So, you know, I'm giving you an honest testimony to say is that, you know, we make dreams come true for anyone's vision
100%.
that, you know, we stand by. And I think that you realize that.
I know.
You know, we were talking to T-Trades, and T-Trades is like, yo, I can't even believe this is, you know, more or less there. And we're just like, Well, you did all the hard work, which is your own studying and your own refining of what exactly you want to do. And the more mechanical that you can make that, the better it is for you. And if you're kind enough to share your vision, which our collaborators have been, it's a blessing to the community. We really appreciate it.
So I think in the new year we'd be well on the way into cooking something I think really useful or spectacular that can overlay with the tea trades. Because what I've taken you next week, I wish it was next week, Cold Brew. These guys are busy until the fucking 1st of January, right? But when we have the tea trades indicator telling us that a change in the state of delivery is going to occur right here, and all of the good bits, I'm interested in where the fuck do I enter? Okay, if I use this as an order block range, I'm going to be looking for 50%, but they've already done some business inside the 50%. Well, then I'd be looking at any order block range that I can shop inside here, or saucy bits, this low, candle that closes below it, high of the next candle, right there, to that low right there, draw that out in time. My friends, what the fuck is this? Right there. So, this is narrative versus precision, right? Everyone can have narrative. Everyone can say, this is going up, right? Everyone can say, the number's going up. Sure, take it. Number's going up, take the trade. Either way, you're gonna be good, you're gonna win, right? But what we seek is to lower that stop loss, and we seek precision, right? Ideally, we seek precision. So this is where I'm going to leave you guys. We've gone on the journey from start of what OBs and the OB model should look like. We've gone through everything, and what we finished off with is what I've showed you guys. And I hope that many of you were surprised in the end when the indicator was switched on and we ended up with the T-Trades indicator. Candle 1, candle 2, candle 3. Right, this is the bit that I dropped the mic. We'll take a few questions and we'll call it a day. I've done the job. I've done what I've. Yeah, it's like 10 o'clock here. I try not to overload, but I think this was what I've shown you here is broken up into many different videos, right? But I try not to overload, especially because some of you guys may need to watch this a few times just to digest what was actually said here. They don't know, yeah, true, they don't know what they've been given yet, because even at the time of me figuring things out and being given all of it, I didn't really know what I was given, right? So this takes a lot of digesting, a lot of back testing, and yeah, let it cook. It's gonna come. So I'm all for the T-Trades indicator at the moment, right? Because what it's doing for you is it's showing you zoom, basically. Your job, and your only fucking job, is to find out where to enter. And it's either going to be a flash range, or it's going to be an OB model range, or it's going to be an order pairing zone. That's it.
So I just want to say a couple words right here, and I want to make sure that the audience is still paying attention to what we're trying to say over here. all I'm asking you guys right now, if you can just do one thing, just drop a heart in the chat. Don't spam it because you're gonna get warned. But just drop a heart in the chat if you believe that you learned something today. Okay? Because there's a lot of people out there that are gonna be quick to have some judgment, and there's going to be quick people that are going to say some things, but when you have genuine people trying to share their own experiences in the market of what they do on a day-to-day basis, right? We're not here telling you, hey, this is how the market's coded, right? This is not, it's not how we're doing this, right? These talks and these live streams are, meant for you guys to just see greater passion in the way that someone delivers either their model, their perspective, their vision, and you ultimately will be able to take away some components of what they're sharing and then attach onto it and be like, hey, listen, like that actually made sense to me. I want to use that. I want to investigate that. And you go onto your own charts. And that's where the magic happens, because then you start to become in love with your process. And, I just really, as a beginning trader, I wish I had that. And it's like now, like any people that are starting out right now, like they're at such an advantage just to be able to hear some people speak and give an honest testimonial about saying, oh, this is how I lost money. This is how, what all the mistakes that I made. This is how I had to find these things to overcome the barriers that most people face, because everyone's going to make the same mistakes because the market has liquidity. The liquidity is going to be offered. And more times than not, you're going to see that if you're doing the wrong thing, you're going to get fucking stopped out. So if you don't want to do the wrong thing, what do you have to do? You have to back test. What does back testing do? Model discovery, knowing your own vision, knowing your own personality. And that's what these talks and these live sessions are meant for. Anybody in the audience that feels that they are on the fence of anything with their own psyche. These are meant to support you. We're here to help you. No one is trying to hurt you here. And we just always want people to understand you're your own person. You're going to have your own responsibilities. You're going to make your own decisions. And ultimately, we're a family. So if you're willing to support us through the journey and the tools that we created for the people that also help create them and want to share them for the communities, you guys are in the right place. And, an honest move, like just hearing today, it's just like, I just can't believe how much information can be condensed in 1 hour when I used to literally watch hours of content of literal garbage that had no meaning for literally what I was doing. And it's like now you can just see there's so much value in this live stream alone. You got taught 5 different models, okay, alone in this one live stream. Okay, just investigate them, see what works for you, and ask questions in the general chat. PoiSzn is going to be able to answer them as he can. He's obviously a busy man, so you just have to give him some respect and some time as well. And we just appreciate everyone's patience. So hopefully you guys found some value in this. And again, I'm very thankful to have everybody here.
100% agree with everything that you said. My job, and most of the guys in here are also in my Discord, members, students, and they know my one or my singular job is to condense all of the bullshit out there into manageable bite-size pieces of information, right? No one's gonna watch fucking 10 or 12 months worth of ICT anymore. In fact, if I could give you guys any advice, is to forget all the ICT that you learned. Anything that you would need to learn to be profitable can be done and found on the T-Trade YouTube channel itself, right? Because often what happens, and you get all of this psychology that's attached to it, is that you get a lot of things coming out that you shouldn't be doing. Don't fucking trade Mondays, or don't fucking do this, or don't trade before news days, no, fuck all of that, right? We will trade every fucking single day. I'll trade before the news, I'll trade during the fucking news, and I'll trade after the news, because there's a level of understanding that comes with all of that, right? We're not seeking ICT. One of my guys told me ICT gave us the vocabulary, right? So that we could talk to each other. So I could fucking explain to you what this FEG, and I'm actually pointing to my screen, you guys can't see, what this FEG actually fucking means, right? Or what this order block is. That is all vocabulary. But it's like speaking a language that you don't fucking know if you don't understand. Like yesterday I took a trade, right? And at the basis of all of this is Zoom. Here's an H1 order block range. And my guys in here will attest that I said, and this is H1, right? I'm not even talking M5 or anything. This is the model. The model showed up for work. The setup is the setup. Take that, take it down here. Why here? If I go and put on the session stat maps, right? And we go back to yesterday, and I haven't even touched using any session stat maps with you guys, right? But what I'm telling you is that it's not fucking random either that this was a daily distribution level, right? But more importantly, if I take away all of the good bits and I only concentrate on reading a naked fucking chart, is this not fractally? We ran this low with this down candle high. Now remember, this is an H1. Did a CSD not occur right there? If this is my order block range, am I not interested in 50% of this range right here? Flatten it out. What happens? These are not magical random fucking things, right? These are not. I've given you the foundation and the building blocks for you to go out there and do your own thing, right? That's it, boys. I think I've done the job that I came here or intended to do. And I'm recording on my side. I know Josh is on his side, and I have someone else recording as well. So Josh will make this available to anyone. Appreciate you all for giving me a platform.
PoiSzn.
Yes, sir.
Yeah, PoiSzn, you're welcome anytime. I want you to understand that. You
I
are
know.
absolutely welcome at any time. Anytime you want to be able to go on live stream, you got an
100%.
open mic.
100%.
And I know that our whole entire community is ears open to you because your experience very shown in everything that you're delivering in your speech. So, we're really
Appreciate all
happy
of
and
you.
we're just very blessed. So thank you so
Appreciate all
much
of you.
and sharing your time and contributing to our community.
And that's just the end. That's just why I do what I do. Is I don't want someone else to struggle the way I did, because Cobra would attest. These things or these pieces of information and how they click didn't fucking come easy, right? They didn't come easy at all. We've been through many fucking rabbit holes, and I've had to cut out a lot of now useless information. But yeah, we're giving it all away for free, baby. Appreciate you all. Appreciate the time. Appreciate your eyes and ears. My DMs are open to anyone and everyone. No feed pics, please. Please don't.
Yeah, people, if you be weird, you're gonna get kicked out of Escape. I'm just being weird. Like there's no being weird here.
Yeah, please, I beg you. My heart is weak. Right, that's it. That's a wrap. You guys can tag me in the general chat, because obviously I'm in my own Discord as well, and you can DM me if you want.
Thank you so much. Hearts all around, and we really appreciate you.
Appreciate all of you.
Everybody else that has questions, please just follow up in the general chat. We'll continue the discussions, and it's going to be very cool to see you back on here now that we have a solid foundation to dive into some deeper concepts as well. So
Yep.
I know that many people that are in attendance right now are going to look forward to that as well. So
Yeah,
awesome.
we're gonna get deeper into some stuff. This is just the foundation of it, right? We'll talk about a few things as we go along.
Wonderful. All right. Get some sleep, my
All
brother.
right,
Thank you
cheers.
for your time.
Take care.
Everybody else, thank you for participating as well. We'll talk soon. Be well, everybody.
Take
Bye
care.
now.